the US dollar will be the last fiat currency to crumble. And I definitely think fiat won't last more than 5 years. It's just the Bitcoin is such a far superior alternative that once you cross that Veblen threshold and you're in the, half million range to 1 million a coin, I think you see a large drop in volatility. And with that large drop in volatility comes the opportunity to use Bitcoin as that currency, right? Like the reason why I think you still need stable coins and you still need dollar value in emerging markets is because a lot of these people can't weather that volatility, right? You're in Latin America now. You kind of know like a lot of people are just getting by day to day. They can't risk that 30%. Not they can't even risk a 10% drop, right? So they need something that is stable. And stable coins, although are not stable because they're pegged to fiat, which is dying, they are stable because debt is still denominated in dollars or derivatives of dollars.
In the fast-moving world of crypto, few voices carry as much weight as Samson Mow and Tom Lee. In past weeks, their recent discussions, especially on popular crypto podcasts, have reignited a powerful narrative. Bitcoin is gearing up for a monumental breakout, one that could redefine market history. Samson Mow, unwaveringly bullish, has doubled down on his bold prediction of Bitcoin hitting the elusive $100,000 mark in a single explosive candle, what he calls the Omega candle. This isn't just hype. Samson ties this seismic surge to a relentless force beyond Bitcoin itself, the dollar's steady loss of value. As the greenback weakens, investors are seeking refuge, and Bitcoin's role as digital gold grows stronger by the day. Meanwhile, Tom Lee, the ever-optimistic market strategist, adds another layer to this narrative. Reflecting on recent market turbulence, Lee draws parallels to April's roller coaster when Trump's tariffs rattled global markets, pushing indices back to their initial points. But here's the twist. Lee sees these price resets not as setbacks, but as cleansing phases setting the stage for Bitcoin's next leg up. According to him, the positive tailwinds gathering momentum, rising institutional interest, regulatory clarity, and global economic uncertainties point towards super highs in 2025. Together, Samson Mow and Tom Lee paint a compelling picture of 2025 as the year Bitcoin breaks free from its historical chains, propelled by macroeconomic forces and investor conviction. If the Omega candle does ignite, it could signal a new era of digital asset dominance, where Bitcoin doesn't just climb, it soars. For those of you tracking the charts, tuning into the latest podcasts, or simply keeping your finger on the market's pulse, one thing is becoming increasingly clear. A major shift is on the horizon. The winds are picking up, and Bitcoin's next big move could be much closer than we think. Now, before we dive deeper into the insights from Tom Lee and Samson Mow, do me a quick favor. If you're finding value in this video, hit that like button, share this with someone who needs to hear it, and drop your thoughts in the comments. I'd love to hear your predictions. And if you haven't already, subscribe to the channel so you never miss a beat on Bitcoin and the crypto market. We bring you daily updates, expert analysis, and everything you need to stay ahead of the curve. Thanks for tuning in. Now let's get into it.
So it's still like the thing that is needed, but that will change when Bitcoin becomes this new gold. That it is 500,000, 700,000 a coin or a million a coin, and at that point people stop wanting the fiat, and from then it just snowballs because these changes from one money to another, they're really not gradual. Either it's voluntary in terms of the government saying, here's a new one with three zeros lopped off, or it's just complete capitulation and people don't recognize it anymore and they're just using something else as money. So it is a very fast change. And I think like no one's seen something as big as the dollar collapse in their lifetime, right? Like you've seen other fiat currencies collapse, but nothing like a reserve currency in real time as big as the dollar. And that is amplified by all the technology we have then into the internet, right? When other reserve currencies died, you still didn't have all these technologies interconnecting everyone and interconnecting all the thought process and fear that is going to accompany any currency dying. So yeah, we'll see what happens. But I think if the US can link Bitcoin to its T-bills, like through a Bitcoin bond, it can soften that delay. Maybe it'll extend it for another 5 years. And is that a good thing or a bad thing? I don't know, but it'll soften the blow because the Bitcoin is kind of cushioning the legacy system as it falls over. And that's also why we're doing what we're doing at Jan 3 to get countries onboarded to Bitcoin, because if you can get these parallel systems in place, Bitcoin pesos, Bitcoin yen, Bitcoin RMB, then at least you have a secondary rail where people have some exposure to it, some understanding of it, that they can make that migration. Otherwise, it's just imagine like we flip the switch tomorrow and suddenly, I don't know, pick a big country, like say India. Suddenly, India must use Bitcoin because the rupee is gone. It's like zeroed. That would be mass chaos, and you don't want that. Like, it's really bad for people when these things happen. It's a lot of chaos, a lot of suffering, and potentially death.
We've got God candles. We've got Omega candles. What should we be calling the $1 million candle? If we ever see one, should we start thinking about naming that thing?
Yeah, I don't know. I mean, Omega Candle is kind of like the final candle, right? And I picked that because it works really well, like with something like the Richter scale, where you can have like a 5 on the Richter scale. You can have a 5 Omega day, which is a 500K candle, and a 10 Omega day. So it kind of works up to a million, right? A 10, 12 Omega. And actually, if you're paying attention to money in general, you can see that there are already Omega candles in many countries like Egypt, Turkey, and whatnot. So it's just a matter of time. But I think beyond 1 million, maybe you don't need it because at that point, if you're seeing these kind of fluctuations, like a multi-omega fluctuation, fiat is kind of on its way out. There's a very famous chart of the German, the Weimar Mark against gold, right? You've probably seen it, but the monthly volatility is just insane. It's like hundreds or thousands of percent in a month, and sometimes going negative when they're intervening with price policy, trying to save it. But we're getting there, right? God candles are already like that, and then once you get omegas, it gets like that, and it's kind of signaling this thing is getting to the end of its life, and something is going to have to happen. Either it's Bitcoin, or maybe they'll reboot it and make a new thing. But with the optionality of Bitcoin, I don't think it's possible to make a new thing. So it's just Bitcoin. Yeah, I don't think there's another thing you can do. Like the era of making new fiat is over. What you've got right now is it. And when this dies, it's over. Because Bitcoin is superior, like in every way, even to gold. So you can't really make a new thing unless you force it on the people and beat them with a stick and say, use the new thing or else you're dead. But, that's a different problem.
Samson, thank you so much for your time.
Okay, thanks, Luke. Great chatting.
Now, let's dive into Tom Lee's powerful perspective on what's shaping up to be a historic run for Bitcoin and the broader market. From the ripple effects of Trump's renewed tariff threats to the major tailwinds building behind risk assets and the evolving battle with inflation, Tom lays out a compelling case for why we could see new all-time highs in Bitcoin and a strong, sustained market rally stretching through 2025 and into 2026. His outlook isn't just optimistic, it's grounded in macro trends that are already unfolding. So if you're wondering where things are headed next, you'll want to pay close attention. Let's get back to the video and unpack Tom Lee's bold predictions.
A lot of, again, Tom, I don't know how you would characterize initially your take. Maybe a little bit early on the stabilization, but then you really pretty much nailed it a couple of weeks ago, and that was the low. You said 5,500 near term on the S&P. We got to that easily. Can you summarize what you've seen the past couple of weeks and what you think happened? I guess the peak tariff angst was hit when you said it was hit, and couldn't it come back still though?
Joe, I do think tariff fears can come back, but the stock market and I think the macro is in a better place today than it was on April 7th. One is I think that the tariff expectations, even if we don't know what they end up looking like, are really much better than what we saw on April 2nd. The second is that the markets that lead stocks, such as credit and the VIX and high yield, are in a much better place. High yield has recovered almost all the widening that happened since April 7th, and the VIX is uninverting the term structure, which basically means the market for volatility is calming down. And then I think when we look at 2026, I think there is stuff to have some confidence about, because the economy is holding up better at the moment, and next year we can look forward to deregulation. I think the comparisons for earnings will be much better for next year. And then, of course, if we get some tariff policies that lead to exports, we have upside to earnings growth. So all in all, I think it makes sense that the markets have recovered to this point. But, the bar for recovering to all-time highs is, of course, higher. But I do think the risk-reward is actually still positive here. Yes, I think new highs are possible this year. I mean, one reason is, companies have proven themselves to manage through shocks, and I don't think investors give them enough credit. That happened with COVID. Companies survived. Companies survived a bullwhip effect on the economy. They survived a surge in inflation. They survived the Fed hiking at the fastest rate ever. So I think this tariff shock, while it is shocking, I think earnings will probably outperform expectations. I mean, that'd be one thing. And then I think the things that were leading us down, whether it's Tesla or the Mag 7 or Bitcoin, they've begun to recover. In fact, as you know, Bitcoin's above its April 2nd level. So Bitcoin, I think, is telling us the S&P should recover towards the 5,800 level in the near term, and that's still upside from here.
What about some of your good calls or accurate calls, Tom, have been based on inflation? And it's a real sort of a push and pull between what we're worried about with tariffs, which would theoretically, restart inflation, even if I don't know if restart's the right word. Maybe there is some still left in the pipeline. But oil, I just always think that the most important factor in inflation, which ripples through everything, is oil. And you look at oil, and I think that could counteract a lot of what we see from, maybe even not only offset the tariff inflation, but actually be more important. So what's the Fed do?
Well, I agree with you, Joe. I mean, the two leading indicators for inflation should be, like you said, commodities, and oil is telling us inflation is weaker. And the labor market, the JOLTS data shows the job market's not that strong, because there's not really a wage pushing inflation. And I think the inflation data recently shows inflation is tracking lower than expected. The Fed has been on hold, and they're saying they're waiting for tariffs. But what's interesting is the ECB has been cutting rates, even though there's tariffs, inflation hitting Europe, or soon to hit Europe. The reason is ECB's inflation measure, the HICP, exclude shelter. If the Fed excluded shelter from its core inflation calculation, it's lower than Europe now, and yet Fed funds is over 225 basis points tighter than Europe. So I can actually sympathize with the argument the Fed should be cutting now, even if we don't know the effects of the tariffs.
And that's a wrap on today's video. Hopefully, the insights from Tom Lee and Samson Mow have got you thinking. What's next for Bitcoin? Is the stage really being set for that explosive rally in 2025 and beyond? We'd love to hear your take. Drop your thoughts in the comments below, and let's keep the conversation going. If you found this video valuable, give it a like, share it with someone who needs to stay ahead of the crypto curve. And if you haven't already, subscribe to the channel for daily updates, expert analysis, and all things Bitcoin and crypto. Thanks so much for watching, and we'll see you in the next one.